Let's take a look at some legacy stuff for Brave New Coin. What a year this week has been, and some interesting movements in the legacy world as well. VIX, first of all, volatility index, fear index. When VIX is rising, we are bearish crypto, and it's generally going to be the sentiment for this week. Yes, BTC rolled over. Yes, it was looking softer than it needed to look. But at the same time, we have a bunch of other stuff going on that no one seems to be really paying attention to or caring about. Like the VIX, when the VIX is up, we're bearish. We're more bearish than bullish. VIX still has been unable to recapture anything below 20 with confidence. We've had that pipeline stuff on oil this week. They paid a ransom in cryptocurrency. We had the Binance news that the IRS is probing them, whatever that means. So the FUD machine is on full whack over the past few days, but VIX up, not good. Dixie has actually gone from negatively correlated to neutral as far as the 30-week rolling correlation is concerned. That's the dollar index. We're still negatively correlated with gold at an historic percentage, and SPX and NASDAQ, both of which to me look rather toppy, we are still highly correlated with. So that's going to be problematic if there are any continued down movements in those indices, obviously. And tech stocks look abysmal this week. A few of the ones that I own pushed below the 200-day moving average for the first time since Corona March. So I let a lot of them go. It's not like a large percentage of my investment holdings or anything, but just each week I take a look and they do not look good. And that does not bode well for crypto at all, certainly, especially with that correlation the way it is. Here's DXY, which in a vacuum, I would be happy to long this chart because it's got two things going on for it. It's got this massive TKC clamp, which says we are oversold here. It's got the makings of an inverted head and shoulders potentially, and the cloud likes 96. So we're definitely at a crossroads with the DXY, regardless of correlations, I think, because if we do pull to 96, I think BTC pulls back significantly. If we break 89, I think BTC resumes its upward trajectory. Something else to be careful with here is you're seeing not necessarily a frank bullish divergence on this low, which it wasn't even a lower low, but you're just seeing a weakening of bearish momentum in general in the DXY. So bullish Dixie shouldn't be bullish crypto. Here's gold, which has actually pulled above the cloud. This is still to me a no trade zone. Even when I adjust the settings for legacy settings, which I checked this week, it still has a bearish TK cross on the weekly. So to me, this just looks like a better short opportunity as this TK cross potentially happens, and shows you another flavor of the possibilities of the edge-to-edge trades. On BTC, we had that edge-to-edge on the daily that happened basically within 2 hours. So it's not like you could really get positioned for it because you had the confirmation and 10 to 15% of it was already down by the time you had the confirmation. Here you're getting a second opportunity to potentially open a short on gold if we get this bearish TK cross, which we probably will. So I still like shorts anywhere between probably 19 and 1850, somewhere in there, based on this with a target of around 1630, 1680, something like that. Silver though still looks great. Still looks white coffee and markup, ascending triangle here pretty obviously. This is a multi-year white coffee and accumulation. So all this still looks fine to me and looks definitely stronger than gold does on the weekly chart, just because it's still consolidating with a bullish bias. This is a super slow moving chart, obviously, so it's not going to do anything crazy anytime soon, probably. But if you're into metals, it's definitely one to keep an eye on. Here's the SPX with weekly cloud doubled settings, and again, it just does not look. You're either looking at this thinking, we are so overbought here. We need a massive drawdown, pullback, retracement, mean reversion to start to look okay again. Or you're looking at this on the double default settings and we're going to get a TK cross to the bearish side pretty soon. So there's no way I'd feel comfortable with a long up here with any chart that looks like this. I'd feel just as comfortable with a short here as I would with a long up here. It just makes no sense. it's at the wrong place, wrong time. So I'm looking forward to that doom when that happens, because crypto is not going to like that. Here's NASDAQ, same thing. It had a bearish divergence on the weekly. And again, it's pointing massive TKC clamps, just looks weak. A bunch of tech stocks, like I said, cross below their 200-day moving average today. Coinbase chart, which I'll get to in a second, looks horrendously bad. And if we get broad exchange regulations for crypto in the US, that's not going to bode well for anybody, especially the exchange coins, FTX, BNB, Uni, Sushi, any of the DEX coins, anything on Binance. It's all going to be bad, right? GME still looks fine, surprisingly enough. I don't know. I've never traded this chart, and it remains a mystery to me, but still holding at 165 somehow. AMC, reminiscent of White Coffee and Ascending Triangle stuff again. The silver example comes to mind. You didn't have a perfect White Coffee and accumulation here from basically January to February, or even February to February. You had a year-long accumulation period. Then we had that insanity in January along with everything else. And this looks okay to me. It's up like 30-something% today, as we announced in the US that we don't need masks if we're vaccinated in indoor settings. So maybe there's bullish headwinds off of that for anything where you're sitting in a crowded place with a bunch of people. So that looks good to me. Honestly, it looks just like silver. It looks like it wants more. Here's the coin chart, which I don't know if you can find a chart that looks this terrible this quickly. Last week I was talking about these potential inverted head and shoulders that kept breaking down. It was attempting to bottom. It went from attempting to bottom several times to retracing the entire move, hitting 300, and then just cratering super quickly. And it's got a growing bullish divergence here now. And I think after hours, it's around 250, and earnings are coming in a few minutes here for Coinbase. So another bellwether in the crypto market, perhaps. But this, it's hard to get in front of this freight train. It just looks like an endless wall of selling to me. So it doesn't look bullish there. MSTR, they announced they bought more BTC at 55K BTC. The price was 55K. Their current average is 24K. Nonetheless, the chart looks mega doom. You can hope for this inverted banana, parabolic downside, falling wedge situation, but it's in this scary zone of no volume support. Previously, we had this head and shoulders that broke up. So you had this bear move that was canceled, and below that, there's not much volume. So this does not look healthy at all. And if it tracks with BTC, it's just going to have more doom together. They're going to be in the Doomerville. 1 hour RSI is severely oversold, but I could see just a washout to like 400 or something really quickly here. Ultimately wants to get back above 800 if it's bullish again, but I don't see that happening anytime soon. So that doesn't bode well. Here's Tesla, and man, what a whiplash it has been for some of us, many of us, all of us, on what Tesla has done. Not only did they go from buying it in their treasury to accepting payment, but they went last quarter to selling some of it, which was fine. And now they've gone full-blown BTC is bad, no longer accepting payments, and it's going to destroy the world. So very interesting that they have that revelation now when they're already holding some. Does this point to some green credits scheme with subsidies for Tesla? I don't know. Is it misdirection for sales? I don't know. But it's all very, very strange behavior. Nevertheless, here's the MA multiplier. This is the 1-year MA. This is 3 times that. And this looks weak to me as well. Another potential head and shoulders. It looks closer, or it looks like it wants to retest this 365 MA basically. You can see how crazy this has been since 2020 and how long it's sort of skated above overbought. But to me, it definitely looks like, along with everything else that holds BTC, just looks weak to me. Here's GBTC, a never-ending cycle of pain since January. The premium, or I should say discount, is at 20% and growing. That's not a good sign. RSI here just looks, ever since November, it's just been down, 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 down. It's ready to retest the 200-day moving average, much like BTC. So this does not look bullish, right? It's gone from looking bullish to potentially recovering to working on a mean reversion, and then it's at a big decision point from there. So definitely no longer as bullish as it once was, obviously. And the big selling volume, that's a big candle over the past few weeks, new highs on that. So it doesn't look too great. If anything, you're looking for a bullish divergence on RSI there on any lower low. Ideally, you get it on the 200-day moving average, but that certainly does not look healthy. And here's ETH, again, big selling volume, big ramping up in selling volume there. Second highest day for volume, aside from January when those redemptions or pseudo redemptions, I don't know if that's the wrong word, but probably when those unlocked. So also looks less bullish, more overextended than anything else. And lastly, I'll mention the ETH-BTC fund and DeFi portfolio I trade for Techemy Capital on Enzyme.finance, non-custodial portfolio management tool. You can deposit ETH or USDC or just watch what I'm doing here. You can see everything. It's completely transparent. AUM, performance, allocations, all the trades I make. You can see that I sold half of all of the crypto stuff earlier this morning, moved it all to USDC, Aave. So for bear market protection, capital preservation, that sort of thing. Because this is on DEXs, it is subject to the whim of gas fees, which had been extremely high for some of yesterday. And it's also subject to just the network working. So it's important to keep that in mind. I can't always do what I want to do when I want to do it. But for the BTC fund, it's a mixture of ETH and BTC with the ability to short either of those through synthetics using inverse IBTC and IETH. And the DeFi portfolio, you can also see AUM allocations. I have to figure out how I'm going to allocate this. As far as waiting for gas to come down or not, which it looks like it has been over the past few hours. And this portfolio is focused on DEXs, DEX aggregators, oracles, lending and borrowing, and then miscellaneous stuff like wrappers. So definitely more volatile than the ETH-BTC fund. You can see the crazy spikes and drops here on all this stuff relative to the performance. This was the site going down for a short period of time, but relative to the performance of this fund. So let me know what you think about any of the legacy stuff. Are you concerned with what's going on in the legacy world? Like, dislike, comment, share, subscribe, and happy trading.